Today closing at 83 Rand 30. It is down 6.5% at the bottom of the top 40. So certainly coming under pressure, but not out of line with the other resource counters today. And is this risk aversion? Is it the stronger Rand? We're sitting at 7.61 to the dollar Rand just a short while ago. What are we seeing coming into the market?
At the moment, Bronwyn, we are seeing a little bit of everything. And we have seen some really welcome weakness in the market. You are seeing a bit of risk aversion. You're seeing that dollar strengthen at the moment. You are seeing that Rand strengthen from around 760 to 750 kind of level. And, you know, it is a bit like a snowball effect. Once the selling starts coming into the market and there is a bit of panic, the panic over-exaggerates itself and pushes it down. And then obviously we had a bit of data out of America that was a little worse than expected this afternoon. And that just acted as a further catalyst to induce a little bit more selling.
Do you think we're going to see more pressure on the resource stocks?
Personally, I was actually using today as a very short-term buying opportunity from a trading perspective, but there could be another day or two where you do see a little bit more selling pressure. But you know, as you move forward and as we move into the second quarter this year, I still sort of say you've got to see weakness as a buying opportunity. Unless you're looking at trading, you know, rather wait for those strong bounces towards 28 and then look to short.
Is that weakness a buying opportunity across the board, or are you being very selective in the stocks?
I think there's got to be some selectivity here. You know, you stick in your top 40 stocks, and if you're going to look at resources, you look at your bulletins, you look at your Anglos, you look at the commodity prices that have run so hard, and you say, well, which commodity prices have lagged? You look at something like coal, and you know, a stock for me like Exxaro jumps out and says, you know, there's got to be some performance as we move into the latter part of this year there. But you know, across the board, you can look at the banks, you can look at a couple of the industrials, and you know, we've got to use this weakness adding to long-term portfolios.
Anglo-American at 276 Rand is down 5.5% today. Recently, that news flow out from Cynthia Carroll at the Mining Indaba, reaffirming the fact that they're going to take out $2 billion in costs out of Anglo-American by 2011. And further, that we are going to see robust growth coming from India in the next decade.
There's definitely, again, that move to the east that's going to really drive these commodity stocks. And, you know, cost pressures are one of the big concerns for a lot of these mining companies at the moment. But, yeah, that statement made by Cynthia Carroll starts...
She's talking her book.
Yeah, maybe talking her book. But, yeah, starts to raise the question, maybe there's going to be some form of merger and acquisition or something going on, you know, in the near future. But, yeah, talking your book. And, again, you know, these stocks, I mean, Anglo's not so long ago was at 350 Rand a share. And it literally went up there in a straight line. So the weakness we're seeing at the moment, I personally believe, is a welcome weakness, and you've got to see it as a buying opportunity. Again, not throwing all your chips at the stock, but just chipping away slowly.
Imperial out with the trading update today, and they are up 6.3% at 88 Rand 30, saying that HEPS would be up between 11 and 20%. That's for the first half. Very good news in a highly cyclical stock.
Very cyclical stock, but obviously very positive to see that in Imperial. And you can see that with the price action today, where the market came off whatever it did today, and that stock outperformed. You know, again, like I said, very cyclical. So, you know, you've got to ask yourself, where are we in the overall sort of macroeconomic cycle? Are we at the bottom? Do we see traction going forward? And is there going to be demand for, you know, general economic activity? And I definitely think that the cycle's turning, and a stock like this should benefit as we move towards the latter part of the year.
When you cast your eye to the international arena, are you not concerned about this debate that's raging around fiscal deficits and the risk that that poses to emerging markets like South Africa?
It does. It raises a big question at the moment. But, you know, you've got to sort of pull back and say, are the authorities going to stand back and say, are they going to manage that deficit? And it's all about the management. And the credit crisis that we saw recently as we went to the end of 2008 was a classic example of pure mismanagement. So as long as it's managed correctly and kept within a tight arena, then I think that this economy can grow and grow, you know, on a steady sort of you know, steady keel going forward.
Standard Bank, Nedbank, holding their own in a relatively declining market today. Standard Bank is down only 2/3, Nedbank losing 1%, First Rand down 2%. So as you go down, a little bit more hard hit. What is your view of the local banks at the moment? Would you be hedging your bets by putting some money into them?
One almost gets the sense that the recent sell-off we've seen in the resources has kind of sort of moved into the banks, because the banks have actually been quite sheltered in a market that's really pulled back from its highs. And you know, the banks to me actually look very interesting, and I think it's a nice bet to actually go into a couple of them. And you know, exactly what you mentioned, the likes of ABSA, Standard Bank, they actually look nice at these levels. I think you could see about a 10% upside in them, and it's very positive to see banks hold themselves so well in a market that declines the way that we've seen in the last week or